Good morning, traders. So let's get cracking with the DAX this morning. Now, the DAX weekly kind of, it's not quite a rejection bar. It's almost like it's just a little bit of profit taking off a level. So there's nothing really concrete to say that stands out to me anyway. That says that we're going to continue to the upside. Okay, not on the weekly anyway. The only thing that is positive is that we are above the alligator, and we did bounce off the alligator. Okay, but it's not a Fibonacci level. Get it right. So we didn't even get to the 50% Fibonacci yet, where you've got all these different levels here. So yeah, so the weekly is not giving me a nice clear picture at the moment. So this is kind of what I would say is that level and then that level are the key at the moment. And yeah, we're kind of in between those two levels, which is always a little bit of a concern for me. Anyway, so the weekly is not giving us a really good picture. Let's just get to the daily. Let's see what's happening here. Okay, so the daily is giving us a much better picture. So still a lot of confusion. Okay, so you've got down, big up, big down, big up. Okay, big down, big up, big confusion. Simple as that. We are bouncing off the 200-day EMA, which is bullish in a sense, but it could also be that the bears are trying to break through this area, the bulls are preventing it, which is ultimately going to create a consolidation area, which is pretty much what we're doing, right? Now, the big question that we have on our mind is this it? Are we going to move to the upside? And obviously, what we need to do is we're going to need to break above this high here, which you see how that coincides with the alligator. So we're going to have to break above that for this to be valid. Okay, so unlike the Aussie, I think this one we're still trading, taking out money off the table as quick as possible. And what I can suggest is a great way of trading this is the open range break. It's been pretty profitable the last week. Okay, and I'll explain it on the hour for those of you who don't know what the open range break is. So on the daily perspective, I have an inside bar, but there's no conviction, there's no real strength here. That's telling me what's going on. So I just want to get this trend line in, and I have a feeling that trend line, not too much. Okay, so we basically got that trend line there that we need to break. Let's just get down to the 4 hour. Okay, now the 4 hour gives us a very different picture. Okay, but I'm kind of hesitant to talk about Bollinger W because the DAX, we've had 3 and we had 2 last week and both failed. So maybe third time lucky. So this is another Bollinger W. Okay, you can see how price closed outside the Bollinger Band, and it closed pretty much on the Bollinger Band here. Okay, so this is a W. Again, we have diversions, and we also have a very interesting pattern on the awesome oscillator. It's basically an inverse head and shoulders, which is a bullish pattern. Okay, so this is indicating that momentum is changing to the upside. However, you can see how we are still battling below the 204-hour EMA. Okay, and we've got this trend line coming up. So let's just tidy this trend line up. Actually on it. So we've got those two with that one there. Right. So that needs to break. So there's a couple of things that need to break here. The 200 EMA needs to break. This trend line needs to break. We are above the awesome oscillator, sorry, the alligator, which is a good sign, and we've had one of the alligators cross over. So we're looking for the other two to cross over, and then we have confirmation on the higher time frames. But for now, this is it's a double bottom. It's a Bollinger W. You can see the diversions. This is a reversal pattern. Okay, so a break above here. Let's just get that. A break above this high here confirms the double bottom. Okay, and the double bottom target is really going to be around 260 points. Okay, so that's kind of where we are on the 4 hour. Now, if we drill down to the 1 hour, you'll see that double bottom is a range. Okay, you can see this was the one Bollinger W bottom, everything playing with, but it didn't play out. Okay, and it's null and void at the moment because we broke below it. So you've got to discount that completely and focus what you see. Now you'll also notice, excuse me, you'll also notice that the 200 EMA on the hour is also sitting above price at the moment. So there's a lot that needs to happen here for the DAX. And it could be quite explosive. So a break above here and here, all these, you can see how this previous high, plus the moving average, 200 moving average, and the diagonal trend line are all in the same area. So a break through that could mean a pretty serious punch up. But anyway, so if we talk about the open range break, let me just get this tool here. So what I want to show you is Friday. So what you're looking for is the 8 to 9 range bar. Okay, now it also works with the 9 to 10, but the DAX does work with the 8 to 9 range. Okay, so you can see there, that was the bar. A break out of that targets the range height, which is 100%. The 161 extension, it's over there, and you can see how profit taking happened there and came back. Okay, so I'll do one more. And we'll take the previous day, Thursday. So we're looking for the 8 o'clock bar. There it is there. Okay, you can see how profit taking was happening on the 200, and then we hit the 261. It even hit the 361 extension, and more than likely hit the 461 extension as well. Okay, so that is kind of the range break, open range break strategy. So that first hour of pre-market open is what you're looking for. A break above it or below it determines what direction you're going to be trading in. And what I would suggest is the same scenario. Trade with 3 contracts, or trade with a number of contracts that you can scale out of. So you scale out at the 200, you scale out at the 261, because those are the 2 most common ones. Okay, and then leave one to see where it goes to. Now you can either use the different Fibonacci levels, but for me, I'd rather just look to the left and see what do we have here. And you can see we've got a Brooks gap here on the hour. Let's just get it. We've got a Brooks gap there, and we've got a previous low here. So any one of those 2 would have been a decent area to take profit. And the risk-free one, not the risk-free one, but the higher probability one of it, of it being hit, would have been this one. So you take profit, even if it does go past it, so be it. You've banked the profit all the way down. Okay, so that's kind of the way I would play the DAX at this stage, and it has been pretty profitable. I mean, every day last week, the open range break targets were hit. Okay, so it's a very simple way of trading the DAX at this stage. Okay, so what am I looking for? I'm more than likely going to be looking for a long. Okay, and there's going to be a couple of conditions to this, and it's going to be as follows. So we are currently at 760. Okay, 760, and I want to just know where we closed on Friday. So let's bear with me a second. So there's two closes I'm looking for. There's the US close. Okay, so let's just take this one here. So that was the US close there, and then the other one that I'm looking for is the close at 5:30, which would have been when the market closed. And it would have been this one here. Okay, now you can see that from when the market closed to when the US closed, we rallied 58 pips. So this is a magnet. So in other words, it's an area where the bears will aim for, and this is also a magnet. Okay, so these are two areas that are pretty strong magnets, especially on a Monday morning. So what I'm looking for is any form of a bullish action first here. If that fails, I'll be looking here. But as I said, the open range break is definitely the first game that I'll play today. And that's really wait for the break of that first hour in the pre-market and trade in the direction of the break. If it is short, then it's going to be, to me, it'll be a scalp for now. I just can't see the DAX breaking through here with much strength. You can see how it pushed through and it hovered around the 200 and then back up again. And you can see how back here it uses the 200 as support. I mean, the 200 EMA is something which a lot of big traders use as an indication of where the market's going from a long-term perspective. So when it hits here, you can see the buyers are going to be stepping in. So I'm still, until we break below here, I'm not really going to change my tune. This is a big move up. This is just a retracement, and I'm expecting a break to the upside. Okay, so for me, it's still looking for longs. I'm looking for consolidation somewhere. It's hard to call, but somewhere in this area here. So it's either here. Sorry, either here. Okay, at 750, 12,750, or a little bit deeper down over here at 709. Let's just double check this range bar here. See if that target has been hit yet. No, this target hasn't been hit yet, so this is still the next target here. Okay, now, which makes a lot of sense. So in other words, a pull up to here, a bounce off this area back to test this break here. Okay, maybe I must just get rid of all this nonsense here. What's this target? The target is a previous high. Okay, so let's just delete that. Okay, so it makes sense in the following manner. So this range bar's target is this previous high here. So let's just delete that horizontal segment and I'll use the fluctuant. So that's the target of this range bar. Okay, so we're waiting for that target to be hit, which is the previous high. Okay, then just above it is this diagonal and 200 EMA. Okay, so that is an indication that we know there's going to be some kind of profit taking there, and they'll push the price down. But what you want to look at is the following, and I'm just going to do that. So by price getting to there, we have a reversal pattern here in the sense that we have a cup and a handle, okay, which is going to push it the upside. And you can also call this a shoulder, a head, and another shoulder forming. Okay, so for me, the key to this move is a break of this area. Okay, so I'm just going to do this. So a break of that area. So quite simply, a break and hold on the 1 hour above the 200 EMA on the hour is going to validate the bigger double bottom, and it'll also well, on the hour it'll be a range, on the 4 hour it'll be a double bottom. So this is a range currently. Same principle. So a break above that is going to send us the height of the range. Okay, and the height of the range is 250 points. Okay, so that's kind of what I'm looking for. I'm looking for a reason to get long, basically. So whether that reason is going to be in this area here, or if it's going to be on the open range break on the open range candle, we will take some profit and leave a few contracts in for the higher target. Okay, and if we can just, before we go off, let's just take a conservative view of this double bottom. Okay, I just want to see what's been targeted. Okay, so we've got these tails here, got all these down, but these inside bars here, which we are targeting. Anything more? No. Okay, so that does make sense. I'll just move that and be a little bit more conservative with that area there. So that's kind of the long-term view that I'd have, or medium term. Not so much a long-term, but more of a medium-term view over a couple of days. That's where we're heading for. Once we get there, we'll reevaluate and see what happens. Okay, so just to summarize, obviously we need a break above here for this target to be met. Okay, so there's a big area that we need to get through, and that's that. If we get through there, then we have a good high probability trade to get up to the top here. Okay, for me it'll be the open range break. And sorry, what I didn't mention on the open range break, and I'm just going to delete everything here. So what I didn't mention is where you place your stops. Okay, so let's just get where is it? This Friday 8 o'clock. Okay, there's the range break there. So the way I would do this normally is basically on a 10-minute. Okay, so if I get a 10-minute candle close, which is this candle here, on the close of the candle, I'm long, right? But my stop is to start off with below the bottom of the range. And the reason being, I want to see what happens at the 38.2. Because if we break through here, what I'll do then is I move my stop up to below the 50% of the range here. Okay. And that's typically how I trade this open range. So normally it's a one-to-one trade. So if you get a break above here, you can get up there. Okay. Now what you can also do is you can use a bit of logic, and I'll often do this, is you can see you don't really have the definition of the range. At 8:30, you don't have a definition of the range. But you can see that we've had a massive engulfing candle, and we've broken through the alligator. So you can already start assuming that this range break is going to be to the upside, because we are above the alligator. Alligator is pointing up. If I just move that across like that, and let's just delete the Fibonacci channel, you'll see we've had a big engulfing, broken through, and we're coming back to test this. So the top of the range is there, but you can see the logic dictates at this stage that we are above the alligator. Alligator standing up. This is a long, and you could get in. You could get in early on it as well. Okay, so that's kind of the play for me. Hope it helps. Stay safe, stay profitable, and I'll catch you guys later.